Hey everyone, welcome back to Corporate Decoder, where we try to make boring financial documents sound a little less boring, especially when it comes to these shareholder reports. Things can get super dry, but we're going to try and find some juicy tidbits in here for you today. Before we dive in, make sure you hit that like button and subscribe. Turning on notifications helps too as we unpack these dense financial filings. Also check out our Discord link in the description below to chat with other finance fans and get exclusive content. So today we're taking a look at United States Securities and Exchange Commission filing from DWS DWS Variable Series I. This is essentially a report card from school, but for your money. And trust me, these reports can tell us a lot about how these funds are performing and where your investment dollars are actually going. Let's jump right into some of the key numbers and what they actually mean for the investors. We're looking at a snapshot as of June 30, 2025. First up, the DWS Capital Growth VIP Fund reported net assets of a whopping $1,066. That's over $1 billion in the fund. Pretty impressive, right? They also hold 72 different investments in their portfolio, and their portfolio turnover rate is 7%. A low turnover rate generally suggests a more buy and hold strategy, but for a growth fund like this, it might make you wonder if they're really being active enough with their investment fent. A low turnover rate generally suggests a more buy and hold strategy, but for a growth fund like this, it might make you wonder if they're really being active enough with their investments. Now let's talk about what the fund actually invested in. A huge 99% of the fund is in common stocks. This means they're putting most of their eggs in the stock market basket, which generally comes with higher risk but also higher potential reward. They only have 1% in cash equivalents, meaning they're not holding much ready cash, and 0% in preferred stocks or other assets. This heavy focus on stocks tells us they're aiming for growth. Looking at where that stock money is invested sector-wise, information technology is the big winner here at 46%. That's a massive chunk of the fund concentrated in tech companies. Communication services comes in at 15%, healthcare at 10%, and consumer discretionary also at 10%. This heavy leaning towards tech and growth sectors means the fund's performance will likely be very sensitive to how these specific industries are faring. And who are these top tech investments? Well, the top 10 holdings make up a substantial 53.7% of the fund's net assets. The biggest players are Nvidia Corp at 12.2%, Microsoft Corp at 11.2%, and Apple Inc. at 6.5%. Just these three companies alone represent nearly 30% of the entire fund. While these are all solid companies, this level of concentration means that if any one of them stumbles, the whole fund could take a significant hit. It's like having a few very large pillars holding up a building. If one cracks, the whole structure is at risk. Now let's peek behind the curtain at the fund's financial health. As of June 30, 2025, the fund has total assets valued at over $1,068,000. On the other side of the ledger, total liabilities are around $274,000. This means the fund has much more assets than liabilities, a good sign of financial stability. When we look at the statement of operations for the 6-month period ended June 30, 2025, we see how the fund made and spent money. Total income was just over $3 million, primarily from dividends. Expenses, on the other hand, were about $2.5 million. The management fee alone was $1.8 million. This resulted in a net increase in net assets from operations of over that realized gain of over $72 million and a slight unrealized loss of about $2.5 million. This resulted in a net increase in net assets from operations of over $70 million. It's interesting to see that the fund incurred a net realized gain of over $72 million. And a slight unrealized loss of about $2.5 million. This resulted in a net increase in net assets from operations of over $70 million. That's a healthy boost to the fund's value. Digging deeper into the financial highlights for the DWS Capital Growth VIP Class A shares, we see a change in net asset value per share from $43.97 at the start of the period to $40.20. The fund saw a strong total return of 26.62%. So even with a slight dip in this 6-month period, the longer term picture seems robust. The expense ratio is listed at 0.49%, which is quite competitive, especially for a growth oriented fund. The notes to the financial statements give us some important background. For instance, we learned that the fund is organized as a Massachusetts business trust and that DWS Investment Management Americas Inc. or DIMA acts as the advisor. They also mentioned that the fund is non-diversified, which basically means it can invest a larger portion of its assets in fewer companies. This strategy can lead to greater risk and potential for substantial losses if those specific companies perform poorly. They also detail their securities to financial institutions for a fee. This section is often a goldmine for understanding how the fund is run and whether the management team is doing a good job. The Board of Trustees reviewed and approved the renewal of the investment management agreement with DEMA in September 2024. They considered many factors, including the fund's performance compared to market indexes and peer groups, where they considered many factors, including the fund's performance compared to market indexes and peer groups, where they considered many factors, including the fund's performance compared to market indexes and peer groups, where the fund's Class A shares were in the third quartile for 1 year and second quartile for 3 and 5 year periods. They also noted that the fund underperformed its benchmark over those periods. Regarding fees and expenses, the board concluded that the management fees were reasonable in light of the services provided and noted that the fund's total operating expenses were competitive. They also reviewed IMA's profitability from managing the fund, concluding that it was not unreasonable. Let's shift gears to the DWS Core Equity VIP Fund. Here we see net assets of around $109.6 million with 94 holdings. The portfolio turnover rate is 16%, which is moderate. Like the growth fund, 99% of this fund is also in common stocks. The sector allocation here is more diverse than the Capital Growth Fund. Information technology leads at 31%, followed by financials at 15%, communication services at 11%, and consumer discretionary at 11%. This diversified approach across sectors is typical for a core equity fund aiming for broad market exposure. The top 10 holdings for this fund represent 42.9% of net assets. Microsoft Corp is the largest at 9.5%, followed by Apple Inc. at 7.6%, and Nvidia Corp at 5.4%. While these are big tech names, the concentration here is less extreme than in the Capital Growth Fund, which is to be expected for a core equity strategy. For the 6 months ended June 30, 2025, this fund generated about $726,000 in income, while expenses were around $324,000. The management fee was the largest expense at over $208,000. They also reported a significant net realized gain of over $5 million and a slight unrealized loss of about $1.1 million and a slight unrealized loss of about $1.1 million, resulting in a net increase in net assets from operations of nearly $4.4 million. And a slight unrealized loss of about $1.1 million, resulting in a net increase in net assets from operations of nearly $4.4 million, and a slight unrealized loss of about $1.1 million, and a slight unrealized loss of about $1.1 million, resulting in a net increase in net assets from operations of nearly $4.4 million. Looking at the financial highlights for DWS Core Equity VIP Class A shares, the net asset value per share started at $13.75 and ended at $12.28. That's a decrease of about 8.5% for the period. The total return for this fund in 2023 was 20.08%. The expense ratio is 0.61%, which is reasonable. The notes here reiterate the fund structure and management. They also mention an expense ratio of 0.61% before reductions and the same after reductions. This suggests they're managing expenses tightly, which is always good news for investors. Here the board reviewed the agreement in September 2024, noting the fund's performance was in the second quartile for 3 and 5 year periods compared to its peers, but underperformed its benchmark in 1 and 5 year periods. They found the fees competitive and DIMA's profitability reasonable. Interestingly, they noted that the fund's total net operating expenses were expected to be higher than the median in the Broadridge universe this time around, a slight deviation from previous reports. Next, we have the DWS CROCI International VIP Fund. This tells us it focuses on international investments and uses a CROCI strategy, which likely means something specific to the company. This fund has $80.5 million in net assets and 80 holdings. The portfolio turnover rate is a whopping 55%, suggesting more active trading compared to the other funds. 97% is in common stocks, with a significant 91% spread across Japan, the United Kingdom, and France. The top 10 holdings here represent 30.6% of net assets, with Shionogi and Co. Limited from Japan leading at 4.4%. Other major holdings include British American Tobacco plc and HSBC Holdings plc, both from the UK. This international focus means currency fluctuations and geopolitical events in these regions can significantly impact the fund's performance. In this fund's statement of operations for the 6 months ended June 30, 2025, total income was about $2 million, offset by expenses of around $334,000. The management fee was about $247,000. Importantly, they saw a net realized gain of over $79 million and a healthy unrealized gain of almost $5.9 million. They had a healthy unrealized gain of almost $5.9 million. They had a healthy unrealized gain of almost $5.9 million and a healthy unrealized gain of almost $5.9 million. This resulted in a substantial increase in net assets from operations of over $10.5 million. For the DWS ROCI International VIP Class A shares, the net asset value per share went from $7.40 to $8.81. That's a solid gain of over 19% for the period. For all of 2023, the total return was a respectable 18.95%. However, the expense ratio here at 0.97% before reductions is on the higher side. After reductions, it stands at 0.85%, which is still relatively high for a mutual fund. This implies that the fund is incurring significant costs or that there are fee waivers in place. In their review of the advisory agreement, the board noted that this fund's performance was in the second quartile for 3 and 5 year periods. They found this fund's management fees to be higher than the median of comparable funds. Specifically, the expense ratio after reductions at 0.85% is noted as being higher than the median in the Broadridge expense universe. This is a point to watch closely. Finally, let's look at the WS Global Small Cap VIP Fund. This fund has $63.9 million in net assets and holds 1 to 48 companies. A high turnover rate of 30% suggests a more active management approach. Similar to the others, 98% is in common stocks. The sector allocation shows industrials at 18%, financials at 17%, and consumer discretionary at 13%. Geographically, the United States dominates at 64% with Japan and the UK at 7% each. This focus on smaller companies globally means higher volatility but potentially higher growth opportunities. The top 10 holdings here represent 17.5% of net assets. Casey's General Stores Inc. from the US is the largest at 2.1%. IFHC from France and MicroStrategy Inc. from the US follow. The lower concentration in top holdings compared to the Capital Growth Fund is evident here. For the 6 months ended June 30, 2025, the fund generated about $742,000 in income with expenses around $278,000. Management fees accounted for over $240,000. They saw a net realized gain of about $2.3 million and a solid unrealized gain of about $2.3 million and a solid unrealized gain of over $800,000, $3.6 million. For the DWS Global Small Cap VIP Class A shares, the net asset value per share went from $10.42 to $10.8, showing a decrease of about 2.3% for the period. Their total return for 2023 was 24.56%. The expense ratio after reductions is 0.89%, which is quite high for a small cap fund and notably higher than the other funds we've looked at. This board review found that the fund's performance was in the first quartile for 1 year, but in the second and second quartiles for 3 and 5 year periods. They also noted that while the fund outperformed its benchmark in the 1 year period, it underperformed in the 3 and 5 year periods. Crucially, the board found that this fund's management fees were higher than the median of comparable funds, and that the net expense ratio was also higher than the median of comparable funds, and that the net expense ratio was also higher than the median. This is a definite area of concern for investors in this fund. Now, let's talk about what all of this means in the bigger picture. DWS seems to be managing a diverse set of funds with varying strategies. The Capital Growth VIP Fund is heavily invested in big tech with a high concentration in just a few companies, which means high risk but also high potential reward if those companies continue to grow. The Core Equity VIP Fund offers a more diversified approach suitable for investors seeking broad market exposure. The CROCI International VIP Fund has a higher expense ratio but delivered strong returns in this period, and has Significant International VIP Fund has a higher expense ratio but delivered strong returns in this period and has Significant International VIP Simplify fund has a higher expense ratio but delivered strong returns in this period and has significant international exposure, which can be a diversifying factor. The Global Small Cap VIP fund is the riskiest of the bunch with a high turnover and higher expense ratio but delivered strong returns in high turnover and higher expense ratio but delivered strong returns in this period and has significant international exposure, which can be. One trend that stands out is the difference in expense ratios. While some funds manage to keep costs competitive, the CROCI International VIP and Global Small Cap VIP funds have notably higher expense ratios. In the investment world, higher fees can eat into returns significantly over time. While strong performance can sometimes justify higher fees, it's always something investors need to be aware of. A key takeaway is the importance of understanding the underlying strategy of each fund. The concentration in tech for the Capital Growth Fund or the international focus of the CROCI fund means their performance drivers are quite different from a broad market index. For investors, it always comes down to aligning the fund's strategy and risk profile with your own financial goals. So to wrap up, these DWS funds offer a range of options for investors. The Capital Growth Fund is aggressive. The Core Equity Fund is diversified. The CROCI International Fund provides global exposure with higher costs, and the Global Small Cap Fund is focused on international growth with a potentially higher risk profile and also higher costs. Always do your homework and consider how these funds fit into your overall investment portfolio. What are your thoughts on these funds? Do you have any invested in them? Let us know in the comments below. If you found this breakdown helpful, give us a thumbs up and subscribe for more. And don't forget to join our Discord community linked in the description. Thanks for watching, and we'll see you in the next one.